2018 could be a big year for some companies if President Trump's tax plan gets passed in Washington. Dom Chu has a look at the stocks that stand to benefit from the bill. Dom?
All right, so it stands to reason if you pay a lot in taxes and tax rates go down, your profitability goes up. So what stocks could benefit? Well, Goldman Sachs and their team of analysts that Dave Costin has put together there have looked at a lot of these stocks. They've got a basket of 49 of them that they look at. They call it their high tax basket. Among those names that they look at in the basket, check out some of these ones, familiar ones to some of our audience here. You look at a name perhaps like a J.B. Hunt, or what else is happening with some of these other ones, ConocoPhillips, maybe a Goodyear Tire. ConocoPhillips has a 49% median tax rate over the last 10 years. Goodyear, 46%. J.B. Hunt, 38%. Zions Bank on the regional bank side, 35%. Those are among the names of the 49 in that Goldman high tax basket. One other place to watch if you're looking for tax reform kind of jockeying in terms of the overall market pricing and position are the small cap stocks in the United States. If you look at the small caps over the course of the past year to date period, you can see that they have underperformed the overall S&P 500, 13% versus the 18% for the S&P overall. So as we watch, Bill Kelly, the tax debate play out, some of these tax-related names and small cap stocks could be the places where the market sees the most action in the coming weeks. Guys, back over to you.
All right, we're going to get a couple guys to name some names here for us. Thanks, Dom. Our next guests are here to give us some stock buys on the tax reform. David Katz from Matrix Advisors is with us. Chad Morganlander from Washington Crossing Advisors. David, I've got a list here. I guess this is yours. Schlumberger, Target, AT&T, and Wells Fargo. There's a cross-section. Why those guys?
Well, we like all those companies with or without tax relief, but they all do pay higher taxes. If there is tax relief, they're going to get a nice 5 or 10% earnings kicker on top of better earnings next year. And they're all selling at pretty reasonable valuations, under 13 or 14 times earnings. So it's a great combination, good fundamentals, attractive valuation, and a nice kicker if you get the tax relief.
All right, Chad, what are your picks here?
So we're bullish on boring stocks. So we like Hershey's, Hormel, and Dr. Pepper. 90% of their revenues, all three of these companies, come from the United States. So they're going to benefit, again, 5 to 10% from this tax break. Also, these companies are growing, profitable, well-capitalized. Even without the tax break, we think that these companies can outperform the S&P 500 with considerably less volatility. And all three of these companies, as an added kicker, have a rising dividend to them of roughly about 7 to 10%.
David, I know that there's been a lot of question whether or not this bill would pass or not, but don't you think there would be those who would get into these companies like these? I mean, you're a smart guy. There are a lot of smart people out there who would see the same thing and get into these stocks beforehand just in case. So I'm asking whether or not you think the tax bill's already factored into the pricing of these companies.
Well, surely you had a significant rally this week as it looked like the tax bill would pass. So a lot of these stocks already have been starting to price better things. But we do think, and this is the most important thing, if you get tax relief, it's not a question you're going to get a one-week jump, but rather that sets the tone for a better market for the next 6 to 12 months because you're going to have a better economy and better earnings. So we wouldn't chase the stocks if there's a vote this weekend. Still a lot happens before the bill becomes a law and before the Senate and the House agree on something, but we do think it sets a better tone for the market, and we do think on all the four that we just listed, they've still got a lot more upside, either with or without the tax relief.
Chad, because they're going to have, as it seems right now, this immediate expensing for capital goods equipment, why not more companies that would benefit from that?
So here's the reality. We think we're in a low return environment on the S&P 500 and that there will be a heightened state of volatility. Yes, in the short run, that may be a benefit. But overall, when looking at the performance of the individual company, as on the stock side as well as the operating performance, all three of these companies are low beta, low vol companies. And we think overall that's going to benefit.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.